My clients have needed me more in the last 5 days than they've needed me in the last 5 years. Today, we're going to talk coronavirus, financial planning, and a little personal wellness. Over the last 5 days, I've been thinking about the communication that I wanted to have with my clients. And I've had a lot of communication, emails and phone calls, which have all been fantastic. And they've all had a similar theme about, is this time different? What should we be doing? Should we be selling or should we be buying? I'm going to answer those questions specifically to the portfolios in another video where I address each of our segments, our accumulators, our pre-retirees, and our retirees, all separately. We're going to do it in one video, but we're going to address what they should be doing right now in another video. Today we're going to talk about coronavirus. Is this time different, and what should I be doing? When I got up this morning and could see that today was going to be another down day, my anxiety and stress went up. And I was reaching out to my fellow financial advisors, and I am charged to be the captain of the ship during the storm. And after 5 days of repeated calls, I was actually reaching out, and other advisors were reaching out to me. And a buddy of mine who knows me well said, "John, have you really stopped and done a little meditation?" Because he knows the type of person I am. These are the things that I suggest for my clients all the time when we're talking about their personal wellness, mental wellness, right? So, you know what I did? When I got to the office, I stopped and honestly, I prayed. I prayed first, and if that's not something you like your advisor to do, then we might not be the right place for you. But I said a quick prayer, and then I found a 5-minute positive mental mindness exercise, and I did it. And if you think your financial advisor shouldn't pray and or shouldn't do a little mindfulness exercise, then this really isn't going to be the place for you. But I can tell you, after doing those things, I turned off CNBC. I stopped focusing on the here and now and recognized what my role is here, what I need to be doing here, and the type of advice and guidance that I need to be providing for my clients. So it was so much more important. I had so much more clarity about what I needed to say to you after those moments. So please, when I ask you guys to do it or suggest it, I want to let you know this is what I do myself. So without further personal wellness, let's get into some information that I got from my stepdad. He sent this to me. I'll try to put the links in. This is all client-facing, good information from First Trust. I'm going to kind of read off right here. I'm going to try to add it to the video. If not, I'll just put the links down below so you can look at it as I'm talking. But there are two pieces that I really like here. So thanks, Dad, for sending that out to me. This is put out by First Trust, a company that I've known and worked with for many years. Brian Westbury is a smart guy. I've seen him in Houston. I think I've even gone to Chicago to kind of go through their kind of their presentations to understand more about their firm and the firm's philosophy. So I really like these guys. Actually, if I'd listened to them more, our portfolios might be doing a little bit better because, frankly, he's very bullish on things. So you got to kind of know the source, right? So a couple things. So is this time different, and should I be worrying about it, and should we be doing something, right? So he went back and looked at a couple different things. So one, we had SARS. Everybody kind of remembers SARS. It was in 2003. The S&P 500 index fell during that time 12.8%. Zika virus, we kind of remember Zika because it's more recent. That was 2015 and 16, 12.9%. So these global epidemics are common, and they've been going on for decades and decades, and clearly the past is not indicative of the future, but it does give us a basis of comparison. Have we had this before? And he states here, it's a word I have trouble saying. It says, we aren't trying to be immunologists. Either am I. I try to be a plain-spoken, real-life certified financial planner that has been doing this for 16 years. Okay, and I have gone through these epidemics before, and the mantra stays the same generally. And if it's not an epidemic, it's a tsunami, an earthquake, a president you like, a president you don't like, a tax cut you like, a tax cut you don't like, a storm in the Northeast, it's tariffs, it's always something. And it's my job to filter the news from reality. Okay, and this is one of those times, and now that we've started this kind of video series, we wanted to reach out directly and address some of the questions and fears and concerns that our clients are bringing back to us, and put some of that to rest. So I'm not really going to speak on coronavirus. I had a lot of ideas. I was going to drink a Corona, but I think that is, I think that's kind of rude to the people that are sick and dying or in fear. And I think it also downplays the seriousness of the last 5 days. I truly feel and understand the stress. I just told you, hey, what I was doing to get ready for today. So if I told you today there was a shot that you could take that could potentially protect you from the coronavirus, you'd be out there taking it. Even if I said that shot's not 100%, but in the event you do get the coronavirus, it definitely lessens it. You'd make sure you got that shot. You'd also make sure everybody in your family got that shot. Then you'd probably make sure everybody in your church and your school and your neighborhood, right, all went and got that shot. Well, the truth is, there is a shot for a disease that kills a lot of people that people don't really take all that serious. So the World Health Organization calculated in 2019, 2020 flu season, there were 15 million flu illnesses, 15 million, 140,000 hospitalizations, and 8,200 deaths. So where are we in our corona? We have about 84,000 cases. So 15 million cases, 84,000 cases. 2,800 deaths in corona, 8,000 deaths in the flu, okay? If we had 24-hour news coverage starting in whenever flu season starts in October, right? And just every single day they were talking about how many hundreds and tens of thousands weekly were getting the flu, and the thousands of people that were dying from the flu from, I don't know, October to March. You'd be panicked. You'd be fearful. Okay? And that's kind of what's going on here, is the news cycle, that 24-hour news cycle is brainwashing you. So it doesn't mean that people aren't getting sick. I'm not denying that. And or dying. I'm not denying that either. And or your portfolios are going down, right? I'm not denying that either. Coronavirus is real, but let's put it into perspective to something that we deal with right here in the US on an annual basis. And frankly, we're pretty flippant about it, right? Much bigger. Millions of people get the flu. Nearly 8,000 deaths last year. Another thing to remember, most of those deaths are in China. And I think they were in a little denial for a little while. So I think they're medically playing a little catch up. And so that has caused an exacerbation of the deaths, in my non-scientific opinion. So, so the question is, you know, is this time different than other times? And what should I do about it? So let's look. So First Trust again put out this great chart. It goes over the 11 times, the 12 last times since 1982, going back to the HIV/AIDS crisis. We have the pneumonic plague, SARS, bird flu, dengue fever, measles, Zika, Ebola, MERS, all of them are on here, okay? And what it says is, if you look here and we look at 6 months out, and we look at 12 months out, 6 months out, 11 of the 12 cases of the epidemics had positive earnings of an average earning of 8.8% in just 6 months after this global epidemic that was just all over the news, right? In 12 months, 9 of the 11 cases had positive prices with an average return of 13.6. So, do we often have global epidemics? Yes. In the past, has the stock market recovered in a 6-month or a 12-month period? Yes. Can I say what's going to happen this time? I can't. But this does give me some comfort that the World Health Organization knows what they are doing, and that we are getting ahead of and prepared of it. Do I know what inning we are in? I don't want to speculate that. He does a little bit, but I'm not going into that. So the question is, does it matter? This actually kind of does matter for a couple reasons. One, we're really at the top of the market. So the higher you are, the easier it is to kind of fall off. So we were kind of ripe for a correction anyways. And a lot of folks are saying, is this a potential Bernie Sanders as a Democratic candidate? Is this, really a coronavirus? Is this a cyclical a variety of reasons. All I do know is if you've had the number of up months in a row at the velocity and the duration that we have from, let's say, October, November until 5 days ago, it wouldn't shock me that we had some kind of pullback. So, one, we were kind of ripe for it. We were teetering pretty at all-time highs. So the fact that we came down doesn't really shock me. Two, this time it's a little bit different because they're actually shutting places down. So let's compare it to Trump's tariffs in China. Well, factories were still operating. You could still get all your goods and services. You were just having to pay 10, 15, or 25% more for those goods and services. But if you needed a battery or some component for your widget in order to deliver from the client, you would deliver it from the client even if you made less profit or no profit, but you were still delivering a product from the client. Now, 50 to 60% of the factories are closed. 7 of the world's largest container ports are in China. They are under restriction, okay? And so, yes, you can't sell something that's not complete. So we are going to have companies that have to go back and restate their earnings. And they're going to have to restate their forward guidance. And it's going to be something that lasts longer than a month, probably even longer than the first quarter. So we could see a half a year of significant changes. Another thing is, so that's on the supply chain distribution, and I think there's going to be significant disruption on that. I think in China, we're having a demand distribution. Think of all those millions of people. They're consumers now. China has been trying to get from an export economy to a consumer economy for a long time. They buy a ton of cars. They buy a ton of phones. And right now, we know they aren't buying phones and they're not buying cars. And if they are, they're doing at single-digit percentages of what they normally do. So that's going to affect, because most of our companies are global and they have been working very hard to get in front of those consumers in China. So those consumers in China aren't buying right now. So we have supply disruption, we have demand disruption. Okay, so I think there are going to be companies, especially multinational companies, that either source things from China and or do business in China. They're going to have to restate their earnings. And what does restate your earnings mean? What that means is stocks sometimes trade on a multiple of their earnings. So if you change one part of that equation, it changes the value, the perceived value. And if the perceived value changes up, then more people want to buy it. If the perceived value based on that calculation moves lower, people are less attractive to it, right? And so there's all these models that determine if you buy or sell based on these valuations. And I truly do believe company after company are going to go out back and reevaluate their earnings and going to reevaluate their forward guidance. So, I also think that some companies are going to kind of piggyback on this, and whether or not they actually have supply or demand disruptions, I think they're likely to blame on this. So it's that happens often a lot. Could we see a reduction of headcount? So that's kind of what we care about in the U.S., right? So our stocks can go down, but as long as people are employed and they're, in the U.S., they're buying shoes and going out to dinner and going to the movies and buying vehicles and upgrading homes, and those kind of things, that is good for our economy. So what really stops that from happening is when people are not employed. So we're going to be watching employment numbers. We're going to see if companies start laying off because of this. My guess is we're kind of long in the business cycle, and so a lot of CEOs and COOs are going to say, hey, let's take this opportunity and kind of, trim the headcount a little bit. So we'll have to really filter what's going on there. So recession, GDP is running around about 2%. I think we're going to see a reduction in GDP. And but is it going to be 2 quarters of negative GDP? I don't know. I don't forecast GDP. I read the guys that do. I think pretty much everybody assumes that we're going to have a global slowdown of some type. So much so that the Fed has already communicated that they are going to be lowering interest rates on the short end. So exactly how many and by how much, we don't really know. But I do know that the Fed is going to be getting involved in doing some monetative easing in order to kind of help all this. So what do we do with all of this information? One, a lot of my clients have been doing, they've been going out and getting some water, some canned foods, some hydrated foods. Fantastic. As long as you're doing it in moderation. I think anything that you can do in order to soothe yourself so you can sleep a little better at night, that's fantastic. But we're not going to try to catch a falling knife. I was actually pretty happy that I heard one of my clients parrot that back to me this week. So this week we really haven't been doing any buying or selling. And we are just going to kind of wait this out. Our portfolios should be for our different segments in the right place, and we will look after this to make sure and reevaluate if they were in the right risk order. And so we will be doing that, and we'll really kind of talk about that in the next video. So what can you do? Well, I do a little self-care. Truthfully, you can call me. Absolutely call me, email me, ask me any question you want. That's what we're here for. I said at the beginning, I've earned all 5 years worth of money in 5 days, okay? Because I'm confident that we've got you in the right allocation and the right portfolio based on your risk tolerance, okay? 5 days, it's been tough, I get it, but I think it's time to get away from some of these screens. Right after you watch this video and the next video, I need you to put down your phone, or if you don't put down your phone, go look at like kitty cats playing the piano or something. But we've got to get out of this 24-hour news cycle. You can get yourself in a hole. I've got clients that are sure they have figured it all out. They know China did this and why they did it, and they're on these conspiracy websites. I personally, I don't think that's healthy. Okay, and my job is to kind of tell you, man, that's not real healthy. Okay, so if you're going to be on a phone or the internet, man, let's stay off those type of websites, and or just get off them altogether. Let's get outside. We're supposed to have some good weather, and turn off the television. You know, when they had these other epidemics, you know, we had a far less 24-hour cable news. Yeah, Fox News was there and CNN, and maybe we were listening to more of the mainstream media, but they have curated and know exactly what fears that you have based on what channel that you watch. And so they make your Corona Fears special just for this channel, and then they switch them up for this channel. And it's time to turn it off, man. Turn the TV off. You pay me to watch the television, okay? And that's what I'm gonna do, except I've turned CNBC off. I'm gonna check on my phone, and I'm gonna check the accounts. But you know what, at 3 o'clock, I'm gonna let it go. And I'm going to continue to watch the news, and let's see how markets open up on Monday. But I challenge you, if you're spiritual, if you're religious, pray. Not for your portfolio, right? I think you know what I'm talking about, but take a moment to yourself. I challenge you to do some meditation. How about some grounding? Get outside. It's supposed to be great weather. Go on a walk, go on a hike, and that's the kind of advice you get here at Oaks Wealth Management. I'm going to tell you to take a hike, turn the TV off, put the phone down, and go outside. Because this time, as far as I'm concerned right now, it's not different. I'm watching this for you. We will make adjustments as needed. Feel free to call me and email me. I will be here. If you are one of our clients, or you fall into one of these 3 segments, the accumulator, which is young, still earning money, pre-retirement, that's 5 to 10 years out, or you're already in retirement and you want to know what we're doing here at Oaks Wealth Management during these last 5 days and what your particular mental mindset needs to be, because they are different in all 3 of those segments, then watch the next video. But until next time, or the next video, go outside and put down the phone. Take care.